Hello students, welcome back. This is Dr. Mercado speaking. This is a lecture for Accounting 1304, Introduction to Accounting 2, and we are covering Chapter 17, which deals with accounting for notes and interest. Now, in this particular lecture, I am going to cover problem 17-14. It's very similar to the prior problem that we did, but in this case, we are dealing with notes payable instead of receivable. Okay, let me jump over to the problem. Okay, so this problem deals with accrued interest payable. So it says the following is a list of outstanding notes payable as of December the 31st. Then we have a list of four individuals, and we are being required to compute the accrued interest at the end of the year and the journal entry. Okay, now notes payable. Okay, this is money that we, the company, owe different individuals or companies or businesses. Okay, so we are responsible to pay. When we did the prior problem, which was accrued interest receivable, we were going to be receiving the money. Okay, so it was other individuals owing us money and we were going to receive the money. Now, in this particular problem, it's accrued interest payable. This is money that we, the business, owe other individuals. Okay, so this is money that we owe. That's the only difference. The other problem was we were receiving money. In this case, we are paying out interest. Okay, so that is what's going to be going down. We're going to once again do the same thing. We're going to do the calculations, calculate the total interest, and then do our journal entry. Okay, so let's start with B. Jones. Okay, for B. Jones, we have a note of $1,000. Okay, the interest is 6%. And I am going to multiply it by the number of days that have passed from when the note was issued to December the 31st, and that's 30 days over 360. And let's see what that gives us. Okay, so that's $1,000 times 6% times 30 over 360, and that gives me $5. Okay, $5 of interest. Okay, Aguilar, the amount of the note is $2,500. The interest rate is 6% as well. And the number of days is 36 days over 360. Okay. Let's multiply that times 36 over 360. That gives me $15 of interest. Okay. Okay. Next we have plant. Plant, the note for plant was for $3,800. The rate for plant is 7%. And I'm going to multiply it by 17 days over 360. Okay. So that'll be 3,800 times 7% times 17 over 360. That gives me $12.56. $12.56. If we look at that third digit, that's a 1. If it's lower than a 4, we keep it as is. So we're going to keep it at $12.56. Okay. Last but not least, we've got Brand. Brand, the amount of the note was $1,900. The rate is 8%. And the number of days is 42 days over 360. Let's see what that gives us. So the amount of the note, $1,900, times the rate is 8%, times 42 days that have passed over 360. That gives me $17.73. So once again, we look at that third digit, because if it's 4 or less, then we keep that second digit as is. So we're going to keep it at 1773. Yes, 1773. Okay. Once we're done calculating those, we add them together. And that gives me $50.29. Okay, of interest that we owe. This is interest that we owe to the different individuals. Now, we're not making our payments yet. I just need to put this money aside in the correct period so we can be able to determine how much interest was earned that specific year. Okay, so now that we have the amount of interest that we owe, we're going to do the journal entry. Okay, for the journal entry, the purpose of doing this is to recognize the expense for the company. So we borrowed money, okay, and we're going to have to pay back that money. But on top of that money that we have to pay, we also have to pay interest because these notes had an interest rate tied to them. So we need to make sure that we update our expense account to reflect the correct amount of interest, okay? So let's go ahead, and these entries are being done as of the end of the year, December 31st. So the first thing we have is my interest expense. It's an expense account. The normal balance of an expense account will always be a debit, okay? So interest expense is going to be debited, and then I'm going to go ahead and I'm going to credit accrued interest payable for 5029. Okay. So those are the entries that need to happen. First, we do the calculations for the interest for each of these clients. These are clients that we owe money to. We're not going to pay them as of the end of the year, but I'm going to put money aside for the interest, okay? Because that interest was earned this year, okay? Once we calculate the interest, we just record the journal entry. Interest expense will be debited. Accrued interest payable will be credited, okay? So that is basically it for this problem. If you have any questions, concerns, with whatever it is that you might need, please feel free to reach out to me. I am here to assist you and provide guidance. Just make sure that you do include the problem number, your attempted solution, and your specific question or questions. That way I can address your inquiries fast, and I don't have to be going back and forth to try to figure out what is it that you were saying. Okay, so that is problem 17-4. I hope you all have a great rest of your week, and until next time, thank you.